Hello and welcome to our conversation on understanding the financials of a company. In this session, we will pick up another company which has gone for IPO in the recent past, and the name of the company is Dodla Dairy. We saw in the last presentation about Zomato, and we saw how the market responded to that company's price. And Dodla recently opened or tapped the capital market in the month of June. On 16th, the IPO opened, and then and got listed on 20th June. And the size of the issue was about 520 crore, but out of that 50 crore is the fresh issue, and the balance 470 crore is the offer for sale. So the company's balance sheet will be affected by company is going to receive 50 crore. What are they going to do with this money? And according to the prospectus, in fact, the entire presentation is based on the information given in the prospectus. Okay, so it says that the IPO proceeds, that is particularly 50 crore, will be used to repay or prepay the company's liabilities, borrowings, either fully or partially. They're also planning to use that money or plan to use the money for capital expenditure. We'll see when we go to the financials of the company. And of course, to meet their normal corporate expenses. Interestingly, unlike Zomato, this company is a family-driven, promoter-driven company. So the promoter is holding about 68% of the total shares of the company. And even after the IPO, 68 is not going to reduce in a big way. So post-issue, the share will be about 64% owned. So still it will remain as even after the IPO, it will remain as a promoter-driven company. And within the promoter group also, we can see that there's a family, it's a family-driven company. The only exception is IFC, International Finance Corporation, which holds about 4.5% equity share. The shares have been issued recently. So we can see that it's a promoter-driven, and within the promoter, it is a family-driven company. And but despite that, the market response was reasonably good. The issue received bids for about 388 million shares, which was about 45 times of the offer. And interestingly, all types of, all categories of investors or shareholders responded positively. The qualified institutional buyer, the oversubscription was about 84 times. Even retail investors is about 11 times. So the market was quite bullish about this. Is it a normal general appetite in the market to lap up any IPOs, or there is something positive about this particular company? That is what we are going to see. And on the listing also, there was a reasonable or a very decent gain on the date of listing. The script got listed at 550 on NSE, which is 28.5% premium over the issue price. On BSE also, it is 23.26%. So will shareholders continue to have that much of confidence, and will the price keep on rising is an important question for us to reflect. But before we get into the company's financials and the business model, it may not be a bad idea to understand the overall dairy market of India. And it's interesting to observe that India continues to be the largest milk producer of the world, 24 to 30%. In 2020, it is 30%. The next is the European Union, which is accounting for about 26% of the total milk production. And we can see that China is accounting for only 6%, okay? But what is important and a matter of concern is still the yield. The milk yield in India is much lower in comparison to most of the countries. We can see that 1.4 ton per animal. Okay, so this is an indicator about how efficiently, how healthy are the cows in India. If you compare with the other countries, I think India needs to address this problem to increase production, to improve the health of the animals and all. With respect to the consumption, the milk dominates the dairy consumption basket, with about 64% of the dairy consumption is in the form of milk. 33% is a traditional value-added products, and the traditional value-added products are ghee, paneer, curd, skimmed milk powder. And only a very small percent, 3%, is emerging value-added products, which are like ice creams. So over a period of time, this particular composition of the consumption pattern or the consumption mix is going to change over a period of, expected to change with the change in the market. And along with that, there is a expectation that the consumption itself overall is going to increase because the urban population is increasing. Expectation is that by 2025, the 37% of population will be in urban. And there is a close correlation, a positive correlation between the milk consumption and the urbanization of a country. Okay. And the market, if you see the market structure, about 60% of the market is still unorganized, and 40% is only organized. And this organized is private sector accounting for 40 to 45%, and the cooperatives are still dominating this sector. So a change in the structure of the industry is also going to affect the nature of the industry, the size of the business, the composition of the consumption, and of course the bottom line and the top line. At present, the unorganized means the traditional milkman. On one hand, there is a possibility people are already questioning, will the change in the structure from unorganized to organized, will that affect the traditional market, traditional milkman? So these are the social costs of the growth. We have to keep in mind that what will happen to this particular part of the industry. Will the corporate sector or increase in the private corporate sector going to have a negative effect on these particular important stakeholder of the industry? Entire value chain is actually the way the industry or the business moves here. Is a procurement from the villages, then milk chilling centers, dairy processing, and the sale of the dairy product. This is an accepted industry value chain, as also presented in the prospectus. But we can see that at every stage, it is a private and a cooperative. So therefore, a significant change is going to happen. We expect that, as mentioned in the industry reports, as well as the prospectus, the private sector role is going to improve or increase over these at every stage of the value chain. Now, with this backdrop about the industry, so let us see something about the company and the company's financials. Dodla is a significant presence in the southern India, okay? And they are having about average procurement of about 1.03 million liters per day. And they are the second highest in terms of market presence across all of India amongst the private dairy players. Of course, with a significant presence in the southern India. And their operations are primarily in Andhra Pradesh, Telangana, Karnataka, Tamil Nadu, Maharashtra. And recently, they also started operating in Uganda and Kenya. They manufacture, besides of course the milk and the value-added product, they also manufacture and sell cattle feed to the farmers through their procurement networks, because the farmers are the consumers of this cattle feed. However, the revenue from the sale of milk dominate their total revenue or total income and the dairy-based products. So 72% of the total income is from the milk, and about 25 to 27% is from the value-added products. We've already said that, seen that the presence of this company is mostly in the southern India, and in most of these states, or rather in all these states, they operate through village level collection centers. They tap farmers, collect milk through their VLCCs, and they have already in touch with, have a relationship with 109,670 farmers. So it's a big network of farmers managed through village level collection centers. And the process of that business is the raw milk is collected from the farmers through VLCCs, then transported to the chilling centers, and thereafter to the processing plants. The procurement consisted of 6,771 VLCCs, village level collection centers, 232 dairy farms, and 94 chilling centers. So therefore, the physical network spread all over the 4 or 5 southern states. And their VLCs has been consistently rising as expected, because their growth of top line, more and more collection happening, more and more farmers coming into their fold. Obviously, they have to increase the VLCs as well as the number of farmers. And the strengths, as mentioned in their prospectus, is that it's a consumer-focused dairy company. They've created a brand in the form of Dodla brands. Their integrated business model with a very well-defined, robust procurement, processing, and distribution capabilities. They focus on engagement with the farmers on a long-term relationship. They believe in building relationships. They also don't want to compromise on the quality, so therefore they have stringent quality control procedures. And they claim that the board is experienced and a very professional management team, but we know that about 64% of the total ownership is with the family. So that is one of the limitations. Will the IPO bring the change in the ownership? Not really, because 68 is becoming 64. And without a big change in the corporate ownership, expecting that the board composition is going to change in a big way, I don't think it's going to happen in the near future. With that background, let us see the balance sheet as given in the prospectus. We can see that the total assets of the company gone up from 609 crores to 864 crores. And the important number for our conversation is the equity. We can see that the company is an equity-driven company, significantly financed by equity. So equity is the shareholders' money has increased from 340 crore to 550 crore. And on the asset side, as expected, because their plant, property, equipments fund will be significantly higher than the current assets. And inventory is actually milk, they buy and sell. So therefore, current assets will be relatively lower than the non-current assets. And we'll see the composition of non-current soon. So let us understand this equity. Equity has gone up, whereas some of their liabilities have been falling. So how and why this equity increase? We know that equity is the shareholders' fund, and it includes the capital and other equity. And other equity here is a significant part, is the retained profit. The profit every year has actually year on year has been increasing from 57 crore to 116 crore as of last 6 months of that 9 months. And how did they make profit? So let us see the income statement of the company. The total revenue of the company, we know that a majority of the revenue comes from the sale of milk. And so has been rising from 1,597 crore to 2,145 crore. And this is for 9 months. And for 9 months, they sold already 1,417 crore before the IPO's information. And that EBITDA margins have gone up from 119 crore to 209 crore. After depreciation and interest, the profit before tax has been positive all through, and after tax, that is net income or PAT has been rising from 57 to 116. And a significant part of it, as mentioned here, they are also retaining, they're plowing back, they're reinvesting money into the business. That explains the increase in the equity. That explains that the business is highly funded by internal funds. But along with the profit, it is also equally important to understand that the company is not only able to generate cash profit, but is also converting the profit into cash from operations. So CFO has been positive all through. CFO has been positive all through. And the CFI, which is a reflection of investment in assets, that's why we saw that the non-current assets are increasing. That means they're buying more and more assets. They're investing in property, plant, and equipment. So that means it is growing, and that money for that investment is actually funded by the profits of the company. And we are able to say that with confidence because the CFI has also been negative. That means the company is actually repaying some loans and also distributing dividends, right? And that we can see from the cash flow. So we can see that the cash from financing negative is because of the repayment of the borrowings, because of the dividend payment. And the CFI is negative because they are acquiring assets year on year. Every year, the property, plant, and equipment and intangible assets have been rising. They are buying more and more assets. So therefore, this explains the increasing CFI is a sign of a growth. And along with that, in increasing CFO, it shows that the company is generating profit in cash and using that cash to fuel its growth or acquire new assets. The profitability indicators, as reflected by the in the IPO prospectus, also shows all positive signal. All through, the EPS has been positive. Both diluted and basic are same because they don't have any convertible instruments on their balance sheet, no convertible preference shares, no convertible debentures. So therefore, there is no dilutory effect or dilutory shares on the balance sheet. And the return on equity has been positive, and the book value per share has increased from 60 to 91 per share. Interestingly, the market has also been positive, as we have mentioned in the beginning. On the listing day, the market was absolutely bullish, and the price went up by 20–25%. Though of late we can see that the price has started falling, but if you observe over a period of time, the market was positive. So therefore, the question remains, will this type of company, which is a very conventional, family-driven company, not yet what you call professionally managed yet, a significant part of the shareholding with the promoters, how long they can sustain the interest of the market is very, very important. So will the IPO change in the shareholding pattern bring any significant change in the governance? Will the company continue to make profits and increase the margins, and of course increase its spread? Even now it is remaining as a southern or a south-based company, not yet a pan-India brand. So unlike Zomato, which is everyone, everywhere, in every city, they know Zomato, but that's not the case with Dodla Dairy. But the market has been very positive. So is it a short-term behavior of the market, or the market was hungry for any and every IPO? Only time will tell. So we will keep on watch on this company, and because of the nature of the business and nature of the product, I think some of us will be very keen to keep a watch and compare with the other businesses like Zomato and Flipkarts or Swiggy's of the day. Thank you very much. And